This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. Today is 6/28/23, show 506. So big news coming from the Semi Group, huh, Nick?
Yeah, that was the big news this morning. Before the opening bell, we heard some news coming out where U.S. was going to restrict AI chips exports to China. So that really hurt stocks like NVIDIA today. Today, you see that stock trading just down $1.40 as we speak. It was down a lot more earlier, but the news has been shaken off, So this was the big deal before. We had the semiconductors rolling over pretty sharply at the open, and now they're only down 37 cents. So the market doesn't seem to care too much about the big news coming out about the semiconductors. Basically, NVIDIA was the leader, which is the leader of the group. That stock was getting hit early, but like I said, only down about $1 and change now. So it has really come back quite a bit. But I find this story a little bit strange, right? It's coming out now. The U.S. is considering more restrictions on AI chip exports to China. I mean, we've heard this for so long. I just don't, I don't think the market can really buy into this stuff anymore. We know that's not going to happen. I don't see it happening. And if it does happen, it's going to be a backdoor deal where it's really not happening. So, we're going to keep an eye on the semiconductors as always, but they still are in an uptrend, and they're a very, very important group, and they're holding up. And today, even if it does decline a little bit, which right now it's coming back, it doesn't look like anything more than a pullback. So don't be shaken by this news.
Okay, nothing to see here. Move along. Speaking of nothing to see here, we've got a central bank forum in Portugal. These central bankers really live the life. They get to hang out with their buddies, plot the destruction of humanity in the nicest places.
Yeah, they have it made, these guys. They're in Portugal today. They'll be in Jackson Hole later in August. And yeah, they have it made. So I don't know what to say about that. That was pretty funny. But, Fed Chairman Powell, he's out there saying that he wants 2 more rate hikes going forward. In my opinion, the market's not buying it because the Fed funds rate is still below the 2-year Treasury note yield. And as long as the Fed funds rate is below the yield, the 2-year yield, the market still got some wiggle room. So watch the 2-year, keep that on your radar. If that gets above 5%, yes, Powell is going to raise rates, and he has to. But right now, the Fed funds rate is at around 4.74%. So we still got basically, a quarter to a half a point to work with. So we'll keep that on the radar. But just remember, watch the 2-year Treasury note yield. That will tell you really everything you need to know. The central bankers will talk tough. He's been talking tough for a while, but the market's not buying it at this point in time.
All right. So we're hitting the end of the quarter.
Yes. So
second quarter, right? Second quarter. Right.
Yeah. So we're coming into the end of the June quarter. And again, you're going to get some window dressing going on into the end of the week. That's favorable actually for a little bit of upside. I don't think there's going to be a lot, but you're going to see a lot of mutual funds out there. Companies that miss big moves in some of these tech names, they'll probably buy those stocks up just to show them they had them on the books for the quarter, even though they didn't make any money. So again, this goes on. It's not legal, but it's been going on from the beginning of time. And I guess it will continue to go on. So watch for some window dressing into end of quarter. Traders and investors should be aware of that. That's generally what will take place.
Okay, so we expect that. Gold hasn't been doing too great lately.
No, gold has been rolling over a little bit here. And again, Kerry, we talked about that 1940 level on gold futures. We're now at around 1918, and the trend is now down for gold. So you want to be careful owning gold here. Doesn't mean some geopolitical event can't emerge and gold skyrockets higher and reverses. That would be bullish in that case. But right now, gold is soft, and the trend is down. Price action is below all the key moving averages with the exception of the 200-day moving average. So you want to be cautious with gold. Trend is also down in silver as well. So be a little bit cautious there. I'll be watching both of these for potential entries, but I believe the silver bottom will take place first, but that still has a while to go before it takes place.
Okay, a Bitcoin, and we have a user comment, but first, what's doing there today?
Yeah, Bitcoin today is pulling back a little bit. It's had a very big run lately, so you have to respect the move that it's had. It broke out of a little bit of a weekly consolidation pattern, so we got to give it the upside bias, probably to around 32,500. Today, it's pulling back by about 1%. So I wouldn't make too much out of it. Still above that psychological 30,000 level. And right now I have it at the Bitcoin futures at around 30,800. So nothing terrible I see on the Bitcoin futures chart right now.
Okay. So what one of our community members mentioned about Bitcoin is the fact that Blackstone setting up a Bitcoin ETF.
BlackRock. Yep, they are doing it.
BlackRock, Blackstone. I mean, so they're doing that, and that has put a floor under Bitcoin, and it's going to basically keep it going higher.
Well, I think it'll put a floor under it for now. So we didn't know that news was coming out, and everybody knew about it. It probably hit around the 16th of June. And right. That's when you saw that the equity or Bitcoin started to make its move higher. So, now that that's official, yeah, you'll get some more interest in it, but I don't think that's the start of a major run. It looks like it's just, a start of a nice consolidation pullback. That's why we never saw Bitcoin really crater, and it was teeter-tottering around that 25,000 level, never could break it, probably because this news was coming out. But for now, that definitely is keeping or helping to keep a bid in Bitcoin, but I would not say that that's a floor. I would just say for now, it's certainly helped it out.
All right. So, what is the game there, though? Does their ETF enable them to manipulate the price of Bitcoin because they can buy, sell, or do both at the same time?
Well, BlackRock has their hands in everything, right? So, what's one more asset class that they don't have their hands in now? So I don't know the overall motive there, but, we're starting to see where regulation is starting to really come in. And I just think this is going to be the next leg of regulation for all the cryptocurrencies, including Bitcoin, which is the biggest. So that's the way I view it. I'm not really sure what this really does overall, how much legitimacy. We've already gotten, products out there like BITO and BITI, which are ProShares products, so this is just going to be, basically the same thing. Yeah.
Another product offering.
Yeah.
I know we covered nat gas before, but Dallas White, 1748, likes us to talk about it. We haven't looked at nat gas today. I haven't looked at the price, but as long as we're covering it, what's going on there?
Yeah, we're right at around 270 right now. I'm sorry, 270 on nat gas futures.
Right. That's a pretty good move.
Yeah, it's had a good run this week. Today, it's pulling back a little bit. The big psychological level that you need to clear is $3. When it clears at 301, 302 level, that's when you're going to get a short squeeze in nat gas. So I like what it's doing. I'd love to see it go sideways for a little bit. When you build a base, it's like building an army and then being able to attack a higher level. So that looks to be what's taking place over the last 3 sessions. I love the chart. I'm in it. I'm looking for it to go a lot higher.
Here, Boysenberry Dracula said gold's performance sucks compared to Bitcoin.
Yeah, well, it does for now. But remember, Kerry, just not that long ago, it wasn't the case, right? So, that's why I always tell everybody, don't get fixated so much on one versus another. Just look at each individual chart on its own merit. But remember the move that gold had when the financial crisis hit. I mean, you could take a look at gold right around March 10th, and it ran up from, basically below 1850 all the way to 2050. So, that was a tremendous run. Now gold is rolling over as, the central bankers have printed a lot of money out there. And, they're telling us that the financial crisis is contained. And, you're seeing it. But, watch every chart. Every chart has a story to tell. And the one thing I always try to tell traders, don't get caught up in the correlations. Just get caught up in the patterns, and the patterns will tell you what you need to know.
Right. Good. I'm just looking through some of these comments. The Fed's balance sheet has stopped falling. Powell has pivoted.
Well, that's why the markets probably have moved higher. The market doesn't believe that Powell will raise again. But remember, it's a 2-year Treasury note yield. I mean, I've been saying this for over a year, right on this program, telling everybody, hey, the Fed will have to raise rates as long as they need to catch up to the 2-year. Now they're above the Fed funds rate is above the 2-year Treasury note yield, not by a lot, just by about 25 basis points. But they have wiggle room here. But once the 2-year gets above there, the Fed will raise rates. So be prepared for that. It will come. It just takes time.
Okay, I'll buy it. I'll buy it. All right, just find a couple more here because we like to get to them. Have this guy on more often. I don't know how much more often I'm supposed to have you on, but here's one. There are supposedly trillions of ounces of gold in the Grand Canyon. If true, I believe gold could totally be a reserve currency for every country. Now, there was a thing on there recently, I think Discovery Channel or History Channel, about how the government, these guys found a humongous gold hoard in the Grand Canyon. And then the government came in and basically ripped them off. And they had a lot of evidence about it there. What's your take? Do you think there's a lot more gold out there and the government's holding a lot more of it than they say?
Well, I think there's a possibility of it. I don't think the government is holding a lot more of it. I think the government knows that it's accessible if they want to get to it. But remember, to try to mine gold is not an easy endeavor. It's a very, very big it's a very long process.
Oh God!
Right? I mean, the process what it takes, Kerry. I once read.
Nightmare. It's a nightmare.
Yeah, I once read that the amount of gold mined a year is about the size of an Olympic swimming pool, 1 foot deep. So it's not very much when you think about it in the entire world. So that's why it's a precious metal. But the earth still creates gold, and silver creates oil. Right? Oil's not from fossil fuels. That's a hoax.
Yeah, anaerobic, oil is created in the bowels of the earth. It's not dead dinosaur juice, not from fermentation, right? So right, call it dead dinosaur juice.
Exactly. When I learned that in the mid '90s from a very, very important oil guy, I won't mention his name, and I met him, and he told me that, I was floored because I used to think about peak oil, but gold is given to us in a very limited amount. So. That's what people have to realize. It's a very difficult process to get out of the ground. I think God gave us gold because that's what should be the world's reserve currency. But unfortunately, we have central banks and it's not.
Yeah, for now we have them. We talked a while ago about rosy CPI, PPI numbers, and Critical Thinker 6485. I like that handle. Don't be fooled by BLS metrics manipulation. CPI calculated using original formula method is still 11.9%. And that, ladies and gentlemen, is the real CPI, not 4.1. Who is receiving an annual 11.9% increase to keep pace?
Well, I love that post because I agree with it. And, that's why I always tell you guys, I don't believe anything. I don't believe the CPI, the PPI. I don't believe the BLS labor report. I don't believe any of it. But what matters is the market's reaction. So, we could get caught up in all of these reports and we could try to say or dispute them or try to say they're not factual. But the bottom line is you have to trade what's in front of you. You have to trade whatever the market is going to do. And that's the hardest thing for some people to realize because they get caught up in the fundamentals. I'm not smart enough to figure that out. So I have to use charts, Kerry. And that's why, I'm never perfect with charts, but I'm pretty accurate for the most part. And I've been doing it for a long time with a fair degree of accuracy. So I will say, don't worry about that stuff. There's nothing you could do. I do believe those reports are all fudged, but just watch the price action. That will tell you what to do.
All right. Last one. Problem with gold standard will be that the gold expansion is too slow and will stop one day. You don't expect economic expansion to stop one day. So that's the argument that gold is too scarce and you don't want the price of your currency, actually the purchasing power, going up, which is basically what you would call deflation, right?
Well, here's the other argument to that. You don't have to just have a gold standard. You could have a silver standard. You could have a copper standard. You could have some kind of standard with maybe nat gas fuel. You could throw other things in the mix. You don't have to be just limited to gold production. So I get that. I understand that. But the world should operate on supply and demand. We don't really operate on supply and demand anymore. So this is where the real problem has come in. We're no longer a capitalist society. We're kind of a corporate socialist society, right? So, for instance, look at like electric cars. Not even Tesla would make a profit if they took away the tax credit. So, that's the bottom line. That's the reality of it. So, we choose and pick who's going to get favored here in the corporate world. So that's just how it is right now. It's how it works. And I don't see it really changing anytime soon, unfortunately.
All right. Well, that is it for today. We're taking the week off because of the holiday, slow trading and such. We will be back a week from this Friday. So that would be the 7th. And we're both taking a much needed rest. But in the meantime, go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Emails are welcome, kl@kerrylutz.com. By the way, if anything blows up in the middle of it, then Nick and I will manage to get together and do a little commentary on it, because I just have a feeling, Nick, I just got an uneasy feeling about it.
Can't take anything for granted, Kerry, in this environment. I agree with you.
Oh, that's the truth. All right, Nick. Hey, we'll talk to you next week from this Friday. Have a great holiday weekend. All of you out there, great holiday weekend. Don't eat too much. Don't drink too much. And don't celebrate too much, right?
That's right. Have a great weekend, Kerry.